Cushman Wakefield shares getting a boost of 1.4%. After Goldman Sachs double upgraded the commercial real estate firm to buy from a sell, and they also raised their price target on the stock to $17.50 a share. It's at $13.58 now. The upgrade comes as Goldman sees the CRE giant well positioned for future growth. Newsflash, COVID is over. And just this week, shares of Cushman Wakefield have risen 13%. That's a weekly chart. It looks pretty. Joining me now in a Fox Business exclusive is Cushman Wakefield Chairman Bruce Mosler. Bruce, thanks for coming on.
Great to be with you.
So business is good.
Business is good. The city is healthy. Post-COVID, we have never seen the numbers we're seeing today. We're up 38% year over year, and last year was our best year post-COVID at 32 million square feet absorbed, 23 million new, and the balance was renewals. This year, what we're seeing is the tech sector's back, finance is right now firing on all cylinders, and in addition to that, legal is continuing to boom.
And you're speaking just about New York City right now?
Just about New York City.
What do you credit the change to?
The return to work.
Yeah.
There's no question about that. Look, right now buildings are 80% occupied. When you're 80% occupied, you're talking about an asset that's full.
I'm just laughing right now because Wendy's reported earnings. People aren't coming in for breakfast as much anymore because they're not going to the office. Sweet Green, $15 salads. Not many people here to buy them. But you're saying that's changing. People are coming back to the office, whether it's J.P. Morgan, whether it's Amazon requiring 4 or 5 days a week.
That's correct. It is changing. Okay. CEOs want their people back because to innovate, you have to collaborate. And to collaborate, you have to do that in person. And by the way, to build a culture for a company, that's only done when people sit together.
You know you're very unpopular with employees, especially young ones these days. What do you tell them?
What I tell them is if you want to grow, if you want to learn, if you want to be mentored, the fastest way to learn is to learn from people who have experience. To get experience, you got to be in the game. At the end of the day, mentorship is one of the quickest way to advance in any business.
When I was younger, I always used to look for the person with the most gray hair and say, that's who I should ask. I'm not joking, because that's the person who knew. Let's go to San Francisco, for instance.
Sure.
How's business there?
By the way, it's improving. Look, the market in gateway cities across the board is bifurcating. It's bifurcating because assets that are well invested in, that have amenities. Amenity space is essential now for what we call Class A trophy buildings. Those buildings that have been invested in.
What's an amenity?
An amenity is conferencing centers, F&B. Landlords are investing significant dollars to do that, to upgrade their assets. That's what's attracting tenants. So San Francisco, just like New York, is bifurcating. The bifurcation is in these better assets. People are returning to work, and we're seeing significant activity there. It's not like New York. Buildings aren't 80% occupied there, but they're coming back. There's no question.
I mentioned San Francisco because that's the AI craze, right? It's happening out in Silicon Valley and in California. So I'm imagining those startups, those established AI companies need office space.
They do, and we're seeing that now in New York. Look, we are the financial capital and the tech capital of the world. Notwithstanding, we all know Silicon Valley is critical, but there are more jobs in the region here in tech than in Silicon Valley. So AI is now beginning to boom as well. We're seeing companies now, OpenAI companies taking space. That's going to be a significant part of the future of New York, I believe, and other gateway cities.
Bruce Mosler, thank you very much. I like the good news. It's needed on Friday. So I'm not the only one going into the office 5 days a week. It's more people.